What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already, as well as that subscribe and notification button as well. I want to make sure you're notified when we release new videos, and the like does go a long way to help the channel, so we do appreciate those who continue to tune in and give us those thumbs up. Now, the nightly and weekend videos, like tonight's video, we focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up through swings and leap trades as well. So if you want to deeper dive into exactly how we set up our charts with the broadening formations, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. Now, go ahead and encourage you to watch this full video because we do go over our triggers and targets, but we touch on all time frames and give some pretty good insight on all time frames. So I think you'd be glad if you stay with us through the whole video. Let's take a look at the agenda for today's video. First, we'll go ahead and recap the price action from today, Wednesday, February 11th. Then we'll zoom out like we always do, take a look at the week, month, quarter, and years price action before we zoom back in, set the 4-hour markers and the triggers and targets for Thursday, February 12th, as well as a quick review of the triggers and targets for the week, month, quarter, and year. All right. So getting to the charts, let's take a look here, starting with the 5-minute like we always do. This is how we take advantage of the proven and repeatable strategy that we talked about. It is pretty simple, right? We look for higher lows at or above opening print to get into calls, looking for previous high day and overnight high as our targets. And then we look for lower highs at or below opening print to get into puts, targeting previous low day and overnight low. Excuse me. Now, we talked yesterday about how really Thursday, Friday, and Monday there were quick moves early in the morning that we commented, especially Friday and Monday, that if you were on the 1 minute you could have caught this. So we went ahead and went down to the 1 minute yesterday, right? If you follow this channel, the 1 minute is not something we normally get on too much, but with how price has been going the past few days, or really almost a week now, with these quick movements and only getting higher lows or lower highs on the 1 minute instead of the 5-minute, we went ahead and went down to the 1 minute again today. So let's go ahead and do that here. We got the 1 minute up, and we can see we actually took advantage to the upside first. Let's get it on here. Here we go. So let's just make this a little bigger for folks. We'll bring it over here. Oops. That's not what we want. We want this. There we go. Sorry, 1 minute chart. A lot of candles to get on the chart there. All right, in focus here. So we can see that opening print was right here, basically at overnight high. And because it was a gap up, that does usually give better risk to reward for the gap close or the gap fade early in the morning, and then taking the bounce off of the gap fill reversal to go back to the upside. But today it didn't really look like that was going to happen, right? So we opened, we pushed up, we did make a soft higher low here in this 3 candle, but it was backdoored by this 2 down that did end up going higher low, right? If we look in comparison to yesterday's price action, right, here's the lows from the end of the day yesterday, and the first low of today was obviously higher than that. So we got the higher low right at opening print. We went ahead and entered calls here once this candle after the 2 down went 2 up, and we did get this higher high, excuse me, soft higher high, but then this did turn into a red 3 candle. But again, we did get a solid higher low, and that pushed us up into the fib extension here of the end of 2025 range that we've kept track of. And it was once we got this lower high here, once the 2 to the right of it broke below it, locking in this lower high, went ahead and took profits. Lower high looking to go lower low would initiate a downtrend. And, we talked about yesterday, there's a lot of noise on the 1 minute chart. So you got to kind of take what you can get pretty quickly most times. So that's what we did. Not a whole lot of profit there, but still money in our pockets. And then we went ahead because of where we were positioned, right? Risk to reward, looking at the possible gap fade. Everybody, we opened right at overnight high. So everybody, this is the top, right? If people are going to take profits, overnight folks are going to take profits. That's where they would, right at open, go ahead and take those profits, because there is that good chance of a gap close. And after this lower high, we did go ahead and enter. Again, not as heavy of an entry as we would if we got the lower high, closer to or below opening print, but because we were still above opening print, still above last week's high as well, which, just as on a side note, once we went above last week's high, that did lock in last week as a higher low. So we are continuing looking to continue the uptrend on the week. We do still need to go make a higher high on the week in order to continue the trend and it not just be bullish consolidation, but we did go 2 up on the week, locking in last week as a higher low. But anyways, back to the downside, we went ahead and entered as soon as we went below this third lower high. Sorry, I keep forgetting folks are on phone sometimes. There we go. It's a little bit bigger for you. So here we got the first lower high, and then we sold here once we broke below that, locking this in as a lower high. And then once we got this third lower high and got this 2 down to lock it in, we went ahead and entered puts. Now we got a second lower high right at opening print, and just still slightly above. So we were still kind of waiting. Didn't want to enter into another another set of contracts at that point, or adding to the ones that we had got up here. We just went ahead and let those ride. Now when we got this lower high below opening print, we did add a few more puts. Once we got to previous high a day, we did cut loose the ones that we bought up here, left the runners from the second set that we bought, came down here. Jeez, I'm trying to make sure this is big enough. There we go. Came down here to the 61.8 fib of the the drop from the break out of the range that we were in for the end of the year. And the reason why we sold a majority of what we had left here is because that was a pretty major level in yesterday's price action. So you can see here's yesterday's price action, basically support, right? Support, well, kind of fell through, but then ended up looking like it was going to be support again. So we did let it go of most of the contracts there. And then once we came and got this higher high, we went ahead and exited the rest of that position. All right, so that's what we got early on in the morning. We did. Another reason I wanted to bring up for getting to those puts was, we did open up with pretty big breadth in the morning, positive breadth, but you can see from the get go, all internals on the Qs were dropping. So, we got our profit on the calls that we got, but looking over here, we're like, okay, at the very least, things are going to neutralize. Again, we talked about the risk to reward as far as the position that we were in, the gap close and all of that. So that's why we went ahead and entered puts here. And then it went ahead and followed through, right? Breadth went all the way down to the trend lower zone. Now, vol QD didn't go down quite as fast, quite as hard, and it didn't actually reach the trend lower zone, but it was still going down. So that's why we did grab those puts. Well, another reason why we grabbed those puts. Switching back out to the 15-minute, though, we did put in a sequence of, we did get this lower high, but then it was followed up by a higher low, an equal low, and then higher high. So it does appear, at least on the 15-minute, we're in this uptrend. Although it was kind of slow, it was an uptrend. We're riding this 15-minute broadening formation, obviously last week's high, and the 138.2 fib extension of last year's price range were acting as a bit of resistance. So it took a little while to get above that level, but we did, and then ran up against the fib 178.6 fib extension of the end of 2025 range, where things seem to kind of flatten out at the end of the day. So a lot of volatility intraday, but when you look at it overall, opening print was 67.24 and we closed at 68.05. So kind of a flat day overall if you just look at it. And the reason why I bring that up is because that plays into the triggers and targets on the 4-hour and the 1 day and the 1 week chart, right? They really don't move too much. So we'll see that here in a minute when we get into that. But just zooming out a little bit further, let's get a cleaner chart here. There we go. So, not really an uptrend set yet, would you say, right? We broke the sideways action and actually the slight downside action, right? We got this lower high, lower low. This was slightly lower high and then lower low, which started somewhat of a downtrend before creating this broadening formation here on the 1 hour. There we go, just like that. So we had that broadening formation, and we've obviously broke above that, but we haven't set the higher low on the 1 hour yet. So as crazy as it could be, oops, let's come back in. There we go. As crazy as it may seem, we could still continue this broadening formation on the 1 hour chart, right? Like if we were to get, we've got some more economic data to come out tomorrow morning. If it just were to went over tank things for whatever reason, we could pull back down here and maybe even bounce off of this fib extension here from the end of 2025 range, which would give us a lower low, but again coming from a higher high, so just expanding the broadening formation, right? It would shift it up a little bit, but it would just again be creating a broadening formation. And on the 4 hour, right, there's really nothing else to pull from this either, right? We've got these soft higher lows, but that's really all they are, soft higher lows. Now, we did go higher than this soft lower high, so that does give me some encouragement. We're back. We've broken above that 1 day downtrend line, which there was also a 4 hour downtrend line with a little bit lower than there. So 4 hour does seem to be up. So that 1 hour just again is going to continue to be key. Keep an eye on that 1 hour, especially intraday. Now, if we look at the 1 day chart, there we go. We did have this 3 combo 2 down, combo 2 up. It did run its STRAT random magnitude, right? The high of this 3 was that magnitude there. So again, things looking positive, but this is just a soft lower high right here. So we do really need to get up to the 71.98 and above that to get that higher high. And again, even if we do get that, we're still just sitting in a broadening formation, right? So we've got this here, and we go here to here. Right, so we've got this broadening formation. Yes, it is. The top broadening, top line for the broadening formation is steeper than the bottom, so it would suggest that sideways to up is the way that we're going to continue to go on this day chart. But that's it. We are in a broadening formation, so I can't say we're in a trend and we're going to be going to all-time highs in blue sky territories at this time. Right, we just still got to continue to play things by ear. Right, so we're still above the range that we were trading in before, at the end of 2025, right? So we popped out from there, we came back, we found support off of that, the top of that previous range, and we're going back to the top of the range that we're in currently, right? So again, patience may be the key here. Wait till we get to that 71.98. If we get some type of higher low above that, obviously we should be going back to the upside. But if we do get some corrective activity and start to turn back down, we could just be going back to the bottom of the range again, right? And again, not the worst thing in the world. At this point, it would be more considered bullish consolidation than anything, but it's not like we would get bearish at that point, right? So on the day chart, we are looking pretty good. There is, this 3 combo 2 down, 2 up, kind of sloppy, not too sloppy. It was pretty straightforward, but we do have a 3. And we've combined all these candles going down into a 2, and then all these candles going up into a 2. We do have technically kind of a messy 3 combo 2 down, combo 2 up that will trigger if we get up to this 69.86 level or above that. So that would look pretty good on the day chart. If we can get up to that level, maybe it takes one more day to finish out that strat. We end up at the end of the week at the highs. But again, patience is going to be the key here. All right. Let's zoom out a little bit more. Take a look at the week. Again, we poked above last week's high, locking in last weekend as a higher low. So not a whole lot more else to say. We just continue to stay the course and continue to remain, as long as we're in the range that we've been trading in for the last 3 weeks, up here between 60 and 70 basically. It's neutral at worst, but it's bullish leaning. We've got a lot of green candles, higher low. We just got to go make that higher high to continue that trend. All right. Looking at the month, again, not a whole lot else to say here. Oops, let's get the right chart up. There we go. Not a whole lot to say here. We're still an inside month, but we're in that upper third of the previous month's price action. So, continue to look for more upside. Any more sideways action can just be considered bullish consolidation at this point. The only thing that we're looking to defend against is going below last month's low, which is 45.08. We don't want to go in here and fill this gap. That would kick off a 1, 2 up, 2 down reversal, and the magnitude of that is not the low of the 1 but the candle to the left of the 1, so that would bring us all the way back down to the $28 level. So from a bull's perspective, you don't want to see us going below last month's low, and if we do, you better hope that we get some type of higher low, right? Find some support before we reach the magnitude of that strat. But from a bull's perspective, again, just continue to press to the upside. 74.21 is all-time high. Anything above that is blue sky territory, so we'll see what happens there. On the quarter, again, ran the strat. 1, combo 2 down, combo 2 up. And so there's not much else to say about it, right? If you're familiar with this channel, you've been hearing me say it for a while. We reached it. The pullback is not unexpected. People taking profits, people just absorbing this big move that we've made over the past 4 quarters. But yeah, nothing bearish at this point from the quarter perspective. And then the same thing from the year, right? We had the 2 down, 2 up trigger early on in January, and it went up to that 70.08 magnitude as well. And so not much else to say from the year perspective. We just want to continue to see price go to the upside. All right. So that's everything from a zoomed in view today to a zoomed out view overall. Week and above, everything is still bullish, right? Neutral at the very worst. If you want to, you can bring up there are some negative to neutral points that can be brought up about price action on a higher time frame, right? We've reached the strat of the magnitude, so it would only be right that we would get some type of reversal, even if on a smaller time frame, to give us some type of higher low, to give us another strat reversal to go back to the upside. But there's not really much there from a negative perspective, right? We just hold the course right now and see where things continue to take us. On the day chart and below, just play the volatility, right? We've been in that range from 60 to 70. If you want to try and play puts at the top of the range and calls at the bottom of the range, or sell calls at the top of the range, however you want to play it, play the range, go and play it. If you want to wait till we break above that 71.98 level with some type of higher low to confirm, that we got support at that level instead of it being resistance, wait for that as well. It's sometimes, the best play is to not make a play. So just keep that in mind as we continue to go forward. Let's go ahead and zoom in here and take a look at how we will approach the day tomorrow, starting off with our proven and repeatable strategy for either early scalps, early in the morning after the market opens, or early entries into longer day trades, right? To do that, let's get our 4-hour markers here on the screen. So we've got previous high a day, overnight high currently, overnight low currently, and previous low a day. It looks like things are pushing down a little bit in after hours. So let's just say overnight low takes us down here. We'll just say around here, right? Next thing that we want to do is just basically wait for the open. And once price opens, that's when we use the proven and repeatable strategy, right? So say we push down overnight and then, get a little bit of pushback up, and we open somewhere around last week's high. 67.62 is that level. This purple solid line is last week's high. So if we open here and we push up, and then maybe you get a little rejection off of overnight high and pull back, but then get some type of higher low at or above opening print, also coinciding with last week's high, we want to look to get into calls. First target being overnight high, so not a lot of magnitude there. Even if you were to get a perfect entry off of, exactly off of opening print level. So probably don't want to let your contracts go at that point. You can be, if you are in the money and you've got multiple contracts, it may be worth your while to let a few go just to lock in a little bit of profit. But previous high a day would be the ultimate target for the proven and repeatable strategy that we use, and it's not too much far further. So it may behoove you to, just hold on to the whole position, and then maybe once we get previous high day, you release half of it or part of it, and then you look to the notes that we'll have here on the 4 hour and the 1 day and things of that nature to see what the next levels to the upside would be, right? So, but either way, there's a lot of words just to say, look for the opening print, look for a higher low at or above opening print to get into calls. If we get the opening print, we push down, and then we get some type of lower high at or below opening print, look to get into puts targeting overnight low and previous low a day. All right, that's enough on that. Let's go ahead and switch to more of a day trading perspective. Taking a look at the 4 hour time chart, we can see we have a big 2 up 1 that we put in on Wednesday. So that does leave a STRAT reversal and a STRAT continuation out there on the board. If it were to reverse and go back to the downside, it would give us a 2-1-2 down. Entry would be at the bottom of the the low of the second 4 hour candle from Wednesday, and the exit would be the low of the first 4 hour candle from Wednesday. The low of the 2, right? So 2-1-2 down, entry at the low of the 1, exit at the low of the 2. If we were going to continue to the upside, entry would be at the high of the 1 or the high of the second 4 hour candle from Wednesday, and the exit would be the high of the first 4 hour candle from Wednesday. So not a lot of magnitude there. Just keep that in mind. And it is, again, at the top of the range that we've been trading in here for a few weeks. So there is that possibility that we could get some, corrective activity and start moving back to the downside. Even if we're just to go back to the middle of the range and get some type of bounce in the middle of the range, just continue to watch that, $70 to $72 level as a possible point of reversal or just sideways action, right? So 2-1-2 down possibility to the downside, 2-1-2 up possibility to the upside, obviously more magnitude to the downside. Keep in mind, we are in this, looks like we've reversed trend and we're in an uptrend here. So 6504 is the 200 fib extension of the April 7th bull flag. So this 6504 level could be a possible bounce point if we get some downside action, if we're going to bounce before we reach magnitude. Now, if we do reach magnitude, that's another thing to keep in mind. If we go below Wednesday's low, that does kick off this 1-2 up combo 2 down, and that magnitude here is the low of the 3 here. So just keep that in mind. We could hit that 6142 level if things really start to roll. And then, of course, not too far below that is the week and month flip, right? We've got economic data to be released in the morning again. So if the market doesn't react positively to it like it did this morning, we could have that downside action and a little bit of a domino effect there, right? Looking at the day chart, right, we're just continuing this 2 up, making higher highs than the previous candle and making higher lows than the previous candle. So shows definite strength. And just looking at the candle itself, it's a green hammer. So definitely more bullish and should be looking to make more upside tomorrow. But again, we're at the top of this range that we've been trading in, and we've got plenty of volatility on everything, on the 1 day chart and down. So with 1, 2, 3, 4 straight days in a row, I won't say green days in a row, because yesterday or Tuesday was a red day. However, it did still go 2 up. That could get a little bit of exhaustion and people taking profits towards the top of the range. So look for that 2 up, 2 down. Now it's got quite a ways to go before it triggers the 2 down, right? We've got to get to the low of Wednesday. And if it does trigger that, then the low of Monday would be the magnitude of that move. But if we do reach that magnitude with some momentum and continue on down, that we are technically in this combo 2 up, combo 2 down, could run into this just domino effect right back down to the downside of the range that we've been in, right? This is some thin structure. If we're looking at it from a daily perspective, even 4 hour perspective, that's some thin structure that can be retraced very easily. So watch out for a kind of domino effect, snowball effect to the downside if we do get it, with the proper catalyst, negative economic numbers in the morning. I believe there's a bond auction at 1:01 p.m. Eastern, as well as I think it's just the Fed's balance sheet or something like that. But so there are a couple other things other than just the employment numbers in the morning that will be released tomorrow. So just keep that in mind. To the upside, though, we would want to continue Now, keep in mind the market maker's expected move high is 70.22. If you're not familiar with that level, make sure you check out the weekend video where we do go into detail of how we get that and chart it. But 71.98 is that ultimate target for the rest of this move. Don't know that we would get it all in one day, but just like there were catalysts that could drive us to the downside, those catalysts could pop us to the upside. We could gap up again today and continue the push. So just keep that in mind. But again, we are coming to the top of the range, so don't go too far over your skis, right? Let's go to the notes here at this point. We've been looking at the charts quite a bit. Let's just look at the notes, right? This is for Thursday, February 12th. There'll be 223 trading days left in 2026 on Thursday, and the close price on Wednesday was 68.05. We know that the week flips red at 59.99. The month flips red at 59.51, and we've got to get down to 45.13 to flip the quarter and the year red. So we've got full time frame continuity to the upside. Week, month, quarter, and year are all green. We know that the market maker's expected move is plus or minus $8.47 from the close price on Friday, giving us an expected range of 70.22 to 53.28. We have no gaps above right now, and then we do have a few gaps to the downside that can continue to act as kind of magnets pulling price back to the downside. So we just want to make sure we keep those in our notes to remember where they're at. From a scalping perspective, we know we're looking for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts, at least early in the morning. If things can develop as the day goes on where you can find scalps at other positions, but at least at the beginning of the day, again, higher lows at or above opening print, look for calls. Lower highs at or below opening print, look for puts. And then on the 4 hour, we talked about to the downside, 212 down, triggers at 66.96, magnitude of 63.23, but a possible bounce point before we get to the magnitude at 65.04, just because we are in an uptrend. And then if we go to the upside, 212 up, triggers at 68.72, 69.10 is the magnitude, so not a whole lot there. But if we do reach it with some momentum, we've got some extended targets listed out here for you as well. On the day, if we go to the downside, that gives us a 2 up, 2 down, triggering at 63.23, magnitude being 61.42. But again, there could be that domino effect situation that takes place. So the extended targets for the downside on the day are 59.29 and 58.47. Now, if we continue to the upside, we just get this 2 up, 2 up continuation, triggering at 69.10. And then we've got our targets of 70.22, 71.98, and 73.15 out there for you. All right. On the week, we talked about how we went 2 up on the week. So actually, this needs to be bold and underlined to signify we have not. The underline signifies we have triggered it. The bold means we are still in force, meaning we are still above that 67.62 trigger, but we've not yet reached magnitude of 71.98. So definitely want to try and reach that. And if we do, we've got some extended targets out here for us. That if price continues to the upside, we want to look for those as we continue on through the week. Coming into the end of the week, not a whole lot left, not a whole lot of trading days left in the week. So we'll see how far we get in those extended targets if we do get up above that 71.98 level. Now on the month, again, 1 2 up, 2 down is possible to trigger, which would take us all the way down to that $28 level, but we do need to get to 45.08 or below 45.08 to trigger that. So quite a ways away right now, a little over $20. So we'll talk about that a little bit more if we start to approach this level, but as of right now, it doesn't look like it's going to trigger. We are looking for just the 2 up continuation. The magnitude of the month strat reversal is the trigger for the magnitude of the week strat reversal is the trigger of the month strat reversal. So once we get to that 71.98, we're looking at 73.15, all-time high of 74.21, and then blue sky territories. We talked about in the quarter, we already ran the 1 combo 2 down, combo 2 up. Magnitude was 70.08, so just continuing to watch for movement higher, which is the same for the year, right? 2 down, 2 up triggered early in January, and we reached the magnitude of that as well. So just looking for all-time high in blue sky territories, moving on from there. But again, we don't like to call tops, bottoms, or when exactly we're going to make a specific price level. We set up our triggers and targets on both sides of the equation and just wait for whichever side to trigger. So that's how we stay, in the positive and ready for whatever the market throws at us, because really in all reality the market can do whatever it wants, right? But anyways, that's it. Those are your triggers and targets for everything from a scalping perspective all the way through the 1 year chart. Try to jam in as much information as possible without taking up too much of your time. So I hope everybody enjoyed the video. If you did, please consider giving it a thumbs up. It really helps the channel, and we think it's a fair exchange for the free information that we're providing, right? We don't charge any fees or anything like that. We just want to help try and make traders better, right? So we'll go ahead and end the video here like we normally do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you got some good rest last night, and we look forward to getting out there and trading with you.